All right. Hello, everyone. Mark here. Happy New Year. Thank you for joining me for another Greenbridge Investing market analysis. I'm sorry I'm running a little bit behind today, but again, I want to welcome you all. If you're new to Greenbridge, you know pretty much, if you don't know how this works, please take a moment to share the symbols that you would like to see in the chat. So when I get to the chat, after I complete my portion of the analysis, I can go over symbols that you'd like to see. I see HS has done that. Hey HS, Happy New Year. Good to see you. So there's a lot of interesting things to talk about here today. So let's get this thing started so I don't talk for 3 hours. All right, so with that being said, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Also, real quick, if you're new to Greenbridge Investing, please make sure to like the video if you like what I'm doing here. Also, subscribe to the channel. Every time I do one of these streams or talking markets, you'll get an email notification from YouTube and you can watch us and ask us questions in real time. On top of all that, let me show you this, right? Our website, if you go to greenbridgeinvesting.com and you go to our pricing page, all right, if you want to know more about our swing trade signal service and all that stuff, we have an active investor package, we have Dave's aggressive stocks, and we also have a free plan. Now for 6 months, you pay $2.99, that comes to $50 a month. Okay, same with Dave's. We also have a yearly plan where it's $3.99. That comes to about $33.25 per month. All right, so those are pretty good prices. Our free plan is obviously free. You get trade of the week every time we send those out if you join up as a free member. Plus, we have a chat room where you could come in and ask us questions for the free plan. In our active investor and Dave's, we have premium chat rooms where we share a lot of insight and a lot of information about trade updates and just general market analysis. Plus, we're sending out swing trades by text, by email, and we have portfolio management ideas by text and by email. We have a 7-day free trial, so I encourage you to check it out. Okay, so enough of that. Let's get into what's going on here in the market. And by the way, if you have any questions, just email info@greenbridgeinvesting.com if you have any questions about that. Hey, Sean, good to see you. Romana, good to see you. Happy New Year. Happy New Year, everyone. So I know we had some interesting questions in our chat room. I saw one from Romana. I saw some other people asking about stocks. So again, please share those questions in here, and I'm going to go over them once I complete my portion of the chat. Now, one more thing that I want to get started here with, as you know, is the economic calendar, right? Very important, especially if you're involved in other markets. Now, let's talk about this week very quickly. Now we have, tomorrow is the 5th, right? So Germany retail sales, that's not a big number. 10 o'clock Eastern time tomorrow, ISM manufacturing PMI for the USA, not a big deal. Again, Germany, harmonized consumer prices, okay, no one cares. Okay, that's on Wednesday. Now, also on Wednesday, January 6th, ADP employment change and FOMC minutes. Now, the FOMC minutes, if there are any surprises in there, it could lead to a market movement. But here's something I also have to say about that day, which a lot of people, I see this economic calendar has completely ignored, which you know, is not very helpful. But on that day, the Congress meets, or the Senate meets here in the U.S., and they're going to determine who the next president of the country is going to be. Okay, now if you follow mainstream news, you're probably not going to know a lot about this stuff. But depending on how that outcome is, things can change very quickly. So obviously it's not even mentioned on the calendar here. That's on Wednesday, and that can be an all-day thing because there's going to be people that object to this, and there's going to be people that object to that. There's going to be a big demonstration in Washington and all that other stuff. Okay, so you need to keep that in mind because that outcome will affect the market in some way, and that will probably have an effect on Bitcoin, the dollar, everything. So just something to keep in mind. You know, this is on Wednesday. It's not as tame or as uneventful as it looks based on this calendar. All right, so if you want to know more about that stuff, just Google it. Do not pay attention to mainstream news sites and all that stuff because they're not really, there's a lot of political, what do you call it? There's a lot of political conspiracy here, and they cover up a lot of this stuff, so it's not very helpful information. I mean, I'm surprised some people even surprise me when they tell me the things that they tell me because they obviously consume too much mainstream information. Anyway, so let's talk about a couple of other these events on the calendar. On January 7th, which is Thursday, Europe, we have consumer price index. These aren't that important unless you're in the euro. Retail sales, it might move the euro, but Forex has been, since November, Forex has been very difficult. I mean, the euro has been like working its way higher, pulls back a tiny bit, and then it works its way higher. Very hard to trade something like that. As you know, I sent out a swing trade, like 4 weeks ago, 3 weeks ago. It actually reached its first target, but it took like a month. It's not really worthwhile, okay? So then also we have ISM services PMI for the USA. Again, no, these are not big numbers. These are nothing to worry about. Canadian net change employment, who cares? Okay, is Canada even still a country? Who cares? Now, non-farm payrolls on Friday. That's an important number. NFP. That's probably the most important number that exists, each month for Forex, for the dollar, for everything. So now in recent months, this has not been, the NFP has not been a major market mover. You have a little bit of movement here and there, and then it's a non-event. So unless there's a major surprise there, I wouldn't worry too much about it. But the thing is, it's good to be aware. All right, it's just good to know that the number's coming out at 8:30 and it can change things. Often we won't take Forex trades going into something like this. Okay, we haven't taken much Forex trades to begin with since November, but that's just something to keep in mind. Australia retail sales and China consumer price index. All right, so we do have some important events this week: NFP and the political situation that I just described on Wednesday. All right, now let's move forward here and let's talk about Bitcoin first, because that's the first thing I want to cover. Again, if you're new to Greenbridge, please make sure you register for the channel here, and also press the like button if you do like the video. If you don't like the video, I'd like to know that too. Even though I'll be depressed, still let me know so that I can make these videos better. All right, and again, share your questions in the chat. I see we have some questions in there, and I will get to them. So thank you for sharing those. All right, so Bitcoin first. Now, if anyone read my TradingView analysis yesterday, this is the chart that I put on there, and it looked like this, right, before that big bearish candle that we got there. And my point of that article was to understand that markets are highly random, okay, but they're not always random. All we can do, people want to know, well, where's the top? Where's the top? People ask me, where do you think the top is? Is it still safe to buy Bitcoin? I want to invest in Bitcoin. Is it still a good time? Blah, 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 right? Now, a couple of things. If you're an investor, that's not the same as a trader. So if you don't understand the difference between short-term and long-term, you need to take the time to understand that difference. It's not the same thing. Most investors don't bother to make that distinction. They just like, oh, I'm just going to buy it and see what happens. But the reason why it's so important to understand the difference is because it's going to affect your perception of risk and how you control risk. As I've been telling people, risk should be your number one priority, okay? Now, I got criticized for being too pessimistic, all right? I like to think of it as being realistic. I've been saying, okay, avoid Bitcoin, avoid Bitcoin. Now, of course, you all know I'm short-term oriented. So for the short term, yes, I've been saying avoid Bitcoin. Now, I've been saying that since 27K, all right? And it ran to what is this high here? 34.8. So it ran about 8,000 points, and I've been saying stay away from it, right? And we got out at 26 whatever, and we left all this money on the table. Now, as a short-term trader, let me ask you, does this mean is this a bad thing that I missed all that? No. You know why? Because I didn't lose any money. All right, so yeah, you leave money on the table. You have to get used to leaving money on the table. That's just a thing that's a regular thing, because what's more important is the risk. Now, for those that don't have any regard for risk, or for those who don't, people who don't have any perception or distinction for long-term and short-term, they're going to just invest, and they're going to invest too big, All right, because I read some website and it said that Bitcoin's going to 100,000 by next year, so I'll throw in my 10K now. Right? Why not? I mean, it's going to go higher. How much pain am I going to take? It just keeps going higher and higher. And plus, not everyone has bought Bitcoin, and there's so many people interested in it right now. It's got to go to 50,000 at least in the next couple of days or something like that, right? Wrong. So I'm only interested in the herd mentality. I'm only interested in levels, and I'm only interested in price action. If things can't line up for me, if the market cannot produce what I recognize as a high probability situation, I don't care where it's going. I have no interest in it because my number one priority is risk. Okay? I don't care how much reward is out there. You know why? It's random. Okay? So now here's the point that I want to make. I've been saying that since Bitcoin's been pushing this like 28K area, 28 to 30K, I've been saying that any further movement, especially reaching 32K, is a low probability. Now, I was wrong. It went there. The thing is, a low probability doesn't mean that it's not going to happen. It just means it's a low probability. Meaning, if there's like a 10 or 15% chance that it may go, that's a chance you take, but there's a large chance that it doesn't go, right? Now, I'm wrong. The thing ran there, and I missed out, but I didn't lose, right? I wasn't short, and I just left some money on the table. So here's the thing. If I'm wrong, I want to lose as little or as little as possible or nothing if possible if I'm wrong. That's how you make money, okay? Because you're going to be wrong. There's no way around that, right? We're all going to be wrong because there's no 100% absolute accuracy in financial markets because of the high degree of randomness. Now, that brings me to this price action right here. So in a matter of minutes, earlier today, this thing pulls back 7,000 points, okay? 7,000 points in this candle for whatever reason. I don't know why. I don't care why, okay? But what if I was buying, especially what if I was, had no distinction between long-term and short-term, and I'm sitting there investing my money. Oh, yeah, it's working. Yeah, I'm making money. Yeah, this is easy, blah, blah, blah. And then I turn on my computer and I see it's at 28K in like minutes. How many people do you think got shaken out of this, got stopped out of it, got margined out of it? All right, now understand something about Bitcoin and the rest of the space. It's unregulated. So if this move right here was engineered by large players, which is very possible in this space, and it's perfectly legal in this space, then guess what? They shake you out of your coins, they collect your coins, and now they're in from a good price, you're out, right? You take the loss, they're in, and now the thing continues. That is the risk you face, okay? So how do we not get involved in all that? How do we avoid all that? Well, if you're short-term oriented or you're interested in the short term, you must have a defined plan like we have, and we follow rules. A defined plan means rules. Now, rules doesn't guarantee, profits. It doesn't guarantee them, but often rules will keep you out of trouble, okay? And that also means that rules may prevent you from being involved in these nice, easy moves that occur every once in a while, right? Occasionally. They're infrequent. I don't care about infrequent. I'm not interested in infrequent moves because I don't make money with infrequent moves. I'm interested in predictable moves, moves that have a high probability of going my way for a smaller amount of risk. That's all I'm interested in as a swing trader. And that also goes for people that want to day trade. That is the mentality you must have. Now, as an investor, it's a different story. Some people say, oh, you can invest at any price. Yes, you can, but you must understand how to control the risk. Now, Andrew talks about it all the time with the size, okay? You must know that. If you don't know that, you're just going to make the wrong decisions and you're going to rely on instinct. Someone recently told me that they had a friend who was making some money in the stock market. And I said, oh, how is he, where's he getting his information from? And basically, this person was just going on instinct. I said, oh, okay, another member of the herd. That's good. We need those people. Does he use Robinhood by any chance? We need those people because that's who let us out of our positions. People that do stuff like that, okay? Relying on instinct and logic is the worst possible thing you can do. And this person happened to be a very smart person, which means investing and trading has nothing to do with intelligence, okay? Because a smart person would not do that, okay? So but this person is acting irrational. Why would you go on instinct? They think instinct works. That's what logic tells you. Oh, he does well at his job because logic. Okay, great. Markets don't work that way. All right, so enough of that rant. I've been ranting for a long time. Let me see how I'm doing with time. Okay, 15 minutes. Wow, it's a 15-minute rant on Bitcoin. Anyway, so let me talk about some levels real quick so I can move on and then start answering your questions. I see some great questions here. So 32.5 is obviously a level. Now, the current candle looks like a bullish pin bar. I wouldn't touch that. Okay, and I'm just being honest. I wouldn't touch this. It may go higher, but the fact that it can just give back 7,000 points in minutes, I'm really not interested in being involved in something like that. Okay, so I want a level that's going to at least tell me that I'm buying where buyers buy. 27.5 is now proven. Buyers bought at 27.5. They bought it up quickly. Now, does this pin bar mean that it's going to break higher and just go? No, this could be the beginning of a broader retrace. It's possible. Either way, I want stability, and 27K or 27.5K is going to be the level that I'm watching for a new swing trade. Now, if Andrew sends out something very aggressive here, you understand, the risk that you face. Now, where can this thing go if this thing breaks out higher? Well, 40.5K is my next inflection point. Can it get there? Anything is possible, okay? I think it's a low probability. I think once this instability shows up and people get nervous, I think the wind gets knocked out of it. But again, I could be wrong. So there could be an aggressive trade that may lead up into that area, but I'm really not interested. I like to buy supports, especially as a swing trader. That is all I'm interested in. Okay, as an investor, you want to try to buy into some of this weakness. The higher it is, the smaller, the less you should buy. Just let's put it that way. That's me being optimistic for you, okay? All right, so let me look at some questions here that I have about, let me see if I have some Bitcoin questions. Hey, Michael, good to see you. DJ, okay. So yeah, I'm going to take a look at ADA. Yeah, oh, nice, right. Ramana bought that night. That was a nice trade, Ramana. So yeah, we're going to take a look at that. So Sean, is there in return on short-term trading versus positions like swing trading over time? All right, hold on. So let's take a look at that question here. Is there a difference in returns on short-term trading versus position trades like swing trades over time using our strategy will yield higher returns over position trades? Well, it really depends on the market conditions, to be honest with you. Typically, long-term trades like investments typically outperform swing trades. Why? Because you usually capture very broad trends, right? Like for example, our Bitcoin inventory, our average price was what, 6,000 or 7,000 or something like that, and now this thing is at the 20 whatever. What's the close right now? 31,000. So I can't put a swing trade together that's going to yield that kind of return, right? So typically, investing will give you a better return, but the trick with investing is it's the risk. So yeah, the return will be better, but what kind of risk do you face? The longer time that you're in the market, the more risk you face. So Bitcoin had went from originally 20,000 back at the 2017 peak. It went to 3,000 at the March low. So as an investor, you had to sit through all that. A lot of people got shaken out. Now, we knew to buy into that weakness. We were confident. We stuck with our plan and all this and all that. And that's how we got an average price of 6,000 or 7,000 or whatever it was. Okay, now it looks like genius, right? But at the time, people were criticizing us and telling us that we were idiots. I remember trolls on TradingView saying, oh, if you follow this guy, he was buying at 13,000 and he was buying at 10,000 and you never would have made money. Well, I don't see that guy putting stuff on TradingView anymore. Okay. Anyway, the point is, you have to understand that yes, long term you can do better performance-wise, but you need to understand how to manage those type of long-term risks. That's the difference. Now, short term, you can do very well with swing trades, but you're not going to capture those very broad moves. So if market conditions are very favorable, like they have been in something like Bitcoin or a lot of these stock market moves, yeah, you're going to have more winning trades than not. But there will be periods where, you know, we go into like a wide range consolidation or something like that. I mean, look at Forex right now. Forex sucks, okay? If we were just Forex traders, there wouldn't really be a whole lot going on unless we were going on smaller time frames. You would have to go to like hourly charts and try to make something work there. But understand, the entire market will have periods like that. So that's where, you know, the longer term investment style can outperform the shorter term depending on the environment. So I hope that answers your question. I know my answers could be very long. Sean, okay, so DJ, AG, so I got some more. Okay, we'll take a look at that. And Andrew just posted an unofficial trade today in the chat room. Oh, on AG? Okay, that's a silver miner. And I was also very interested in the UVXY. I put in the chat room TVIX, which, you know, I don't know where I came up with that symbol. That symbol doesn't even exist, but I was confusing it for UVXY. Anyway, so we're going to take a look at all those. Again, if you have any questions about Bitcoin or stuff, you know, please ask them now. Now, I'm going to go through the chat. Oh, actually, no, hold on. Before I go through the chat, I'm getting excited here. Before I go through the chat, we need to take a look at a couple of things. Hold on a second. We need to take a look at the stock market and a couple of stocks real quick. All right, I won't spend a lot of time on this, but I just hope I made my Bitcoin point very clear, especially for those of you that are not sure what to do in situations like this, okay? These instruments are never, there's no such thing as safety with something like Bitcoin. There's nothing safe about it ever. It's a highly speculative trade. It's an unregulated space. All right, let's take a look at the stock market real quick because there was some nice price action there today, starting with the NASDAQ. So you all know that we've been warning on the NASDAQ, especially me. I've been talking about the vulnerable area between, what was the range low? 12.4 and 13K. And I said this thing is probably going to go for 13K. We talked about this all throughout December. And here we are today. We have another outside bar. Okay, big bearish outside bar. This thing is minus 200 points today. So it's trying to recover off that low, but this could be the beginning of the broader pullback. We've been talking about this pullback, and today may be a good time. I mean, there's about 30 minutes left. May be a good time to take a position in something like UVXY, which is the ultra short VIX. This is basically inverse UVXY. Here, I'll show you. Right, it does the opposite of the VIX index. So I was looking at some call options. Like, you don't need to buy a lot of time, because if you're going to play one of these type of moves where the market has a pullback, it's usually fast, which means you don't need to buy 6 months out on something like this. You can buy like a month out or a month and a half out. I was looking at February. They have weekly options, but I was interested more in the monthly options. I was looking at February, and I was looking at like $15 calls, because if the market pulls back, right, the VIX will spike. And, you know, I wanted to see something like that here, right? So if we get something like that, this thing can easily run, you know, $15 calls were worth about $2.40 or $240 per contract, right? If you get a sharp enough move in the market, and that move may take maybe a week to play out or something, this thing can run $10, right? So those $2.50 calls could, you know, double or triple in price over a 1 week period or week and a half period. And that's why I'm interested in perhaps a month and a half, like February or at most March. There's no need to buy more than that, because if the market's going to pull back dramatically, like, you know, we've been anticipating, it should happen before March, okay? And if it doesn't, you need to get out, because these things just go to zero. 15 call February, $2. Oh, they're $2 now. Oh, because the market recovered a bit. I was looking at them before. They were like at $2.40. So you see, the prices moved dramatically. $2 is a lot better than $2.40. But anyway, something like this, if you buy them for $2 and in a week they're worth $4, you take the money and you get out, right? You doubled, you get out, because it's very rare that this thing will have an enormous spike unless the market has a really dramatic pullback, which again, it can happen, but time is really working against you in something like this. So you have to take your money and run if you have that opportunity. So I haven't put out the trade, but that's what I'm thinking about. Okay, maybe I'll put it out tomorrow. Obviously I'm not going to be able to put it out here. I'm doing the stream. And if Andrew doesn't put it out, then it's not going to go out before the market closes. So just something to think about. Maybe I'll put it out tomorrow. Okay, or we'll talk about it on the Talking Market show if I don't put it out during the daytime. Anyway, all right. So that's the stock market, and let's take a look at the SPX. Right, this is the S&P 500. Same situation. Now notice Bitcoin pulls back. These things are pulling back. Are they all linked? Are they all connected? Possibly it's all that speculative froth. I don't know. I don't read too much into that. All I know is we're in an area that's been vulnerable, and that's why I've been talking about not taking, lots of trades. This is not a place to be aggressively investing. It's a place to take your short-term in and out type trades, right? We had NEO, which is trade of the week before. Look at NEO, completely ignoring the stock market, right? That's what we like to see. NEO is doing its own thing. I mean, what today's high is 54.44. Look, our second target is 54.85. Okay, missed our second target by 40 cents. This thing's at 53.39 right now. I mean, if you have that opportunity, if it's fooling around there and you want to take your second target early, hey, why not? I know a couple of people took this trade. So again, we sent this out the week before. Very nice, right? Everyone got this trade. So what I like to see, what's most interesting to me about this is that the NASDAQ is red, 200 points, and this thing is just in your face green. That is something that trades on its own, right? Tesla. Look, I mean, obviously Tesla's strong today, up 27 points in the face of a very red stock market. I like that. Not correlated to the S&P, even though this thing is part of the S&P now. Not correlated to the S&P, right? So that's when I see setups in stocks like that, I'm much more confident with them compared to these garbage altcoins that depend on Bitcoin because they don't trade on their own, right? So this is a nice example of stuff that trades on its own. Look at Workhorse. Workhorse was a little red earlier. It's trying to find support here. Okay, fine. These electric vehicle stocks, they trade more on their own. And other, they have different variables driving this thing and they're not as dependent. I like that because that means I can rely on chart signals. They're much more reliable than depending on a leader. Okay, so another one, CGC. Look at this one, right? Potheads, for all you potheads out there. This one, again, these things aren't highly correlated to the stock market. The stock market's been making highs and highs and highs. CGC was pulling back a bit, established a higher low, and now look at today's candle. This is a good sign for the pot sector, the cannabis sector. So if that higher low stays in place, right, I'm expecting this thing to break out to a higher high and push into the 30s. Higher low often leads to higher high. Again, not following the S&P. I like to see that. So I haven't called any trades on CGC. I've been, this thing's been a very big pain to trade, but that's another possibility. Plus, Andrew had a bunch of stocks in the trade in the chat room earlier today too, that he was looking at that were also at much more attractive levels. Okay, so those are a couple of stocks to keep on your radars. Let's move on here and let me talk about gold real quick. All right, now look at gold. Look at this. So gold is at 1942 right now. Made a high in 1944. DJ, in the chat room earlier, you mentioned you were thanking Andrew for that WPM trade. Will Wheaton, Precious Metals. I should just say Wheaton Precious Metals. Will Wheaton is an actor. And we can thank gold for this nice move today. All right. Now, we've been talking about bullish on gold. Here's the point that I want to make about gold. You can't buy this now, obviously. If you're not in those stock trades, we basically took advantage of this move through stocks like Wheaton Precious Metals, CMCL, and other ones that Andrew has been on top of and putting on more. I mean, he bought more WPM. On Friday? He put out a trade, an investment trade, an inventory trade. It wasn't even a swing trade. And said buy more. He was going to add more WPM to the portfolio. So nice price action here, right, on gold, which is going to be great for all the miners. Now, here's the thing I want to point out. Back in, what was the low here? November, okay? Closing out November, gold made a low of 1764. Is that the low there? I put 1740 in the chat room. I meant 1764. That was the low. Was there any reason for gold to be at these levels fundamentally? No. Why was gold at this price? I you know, people can say this, people can say that, but I knew it was nonsense. This is how they shake people out. People with logic and people with whatever, they, oh, you know, I don't know, gold, the dollar, blah, blah, blah. Meanwhile, there was no reason. There was no reason for gold to be that low. And it was there. Now, gold has been rallying ever since, right? Fundamentals support this rally. Gold is likely to break that 2,000 point on this leg, on this run. Now, the thing is, what I want to point out is the irrational nature of the market. This low was irrational, okay? No reason for gold to be that low, but it was that low. Bitcoin behaves the same way. Irrational price action. Now, this is logical. What it's doing now is logical and rational. Okay, but we missed the party's over. If you're not in from these lower prices, this is where you should be blocking in profits or letting the thing run at least, right? While all the herd mentality people are reacting and piling in now because gold looks good now, right? Where were you here? Where were you at the high or low? Now, the CFD was very tough to trade. We didn't call any trades on it. I called the euro instead, but there were plenty of gold miner trades to take during this. Now is not the time to be buying them. Now is the time to be letting your winners run and being prepared to trim profits, right? That is what you do. That is how you play these moves. So I wanted to point that out. Now, meanwhile, if you go to gold websites or whatever, they're going to say, gold is going to be at 3,000 by tomorrow afternoon. So start buying gold. And by the way, I have some coins you could buy and go to this website and buy the special program and blah, blah, blah. And I have a special minted blah, blah, blah and all this other nonsense. Okay. So that's what you have to keep in mind. Ignore all that stuff. If you're not at a good level, forget it. Let it run. And eventually gold will pull back again because markets are irrational and they will give us an opportunity to do something with on the short term. Now, is gold an investment now for the long term? Sure, but you have to take a tiny bite at these levels, a tiny bite if you're not in, okay? Because now if you take a tiny bite and it goes higher, hey, you have a little piece. If it pulls back, hey, it won't hurt you. And then you have the opportunity to buy more. So if you have an amount that you want to invest, let's say $1,000, you don't invest $1,000 here, you invest $50, which is a tiny fraction of your target investment. And as the market gives you more favorable prices, now you have more money that you can put into, and to average into your investment. Anyway, okay, I'm not going to talk about the drip method, but I conducted a whole webinar on that, which it's not in the library yet. I have to put it in there. But it was, like a week ago, I had that webinar. Many of you know. So I'll put it in the library. I'll get it in there. And for those of you that missed it, you can check it out. Anyway, all right. So enough about gold. Man, DJ, I talk way too much. You got to stop me. You need to put like a thing in the chat. Stop talking. All right. So before I continue, I'm going to go through the chat now, and I'm going to look through your questions. We're going to begin here with HS because he asked about OMG, ADA, and ZIL. So I'll get through these quickly. Also, if you're new to Greenbridge, make sure you check out our website at greenbridgeinvesting.com. Also, please press the like button and also register for the channel here so that you get an email notification every time I do one of these. And also, at Greenbridge Investing, we do have a 7-day free trial for our swing trade signal service by text, by email, portfolio management ideas by text, by email, and our chat room. I encourage you to come by, check it out. As a free member, if you register, you get the Trade of the Week email, which we send out every week. You saw how well that Neo trade was doing. They don't all work out like that, but we've had a decent track record with our Trade of the Week. And you can also ask us questions in our free chat room. I saw quite a few questions in the free chat room. It's nice to see that. People should be using that chat room. We may not get to them right away, but please go there, ask questions, and we will answer them. Okay, so HS, let's begin with OMG, USD. Now, this thing's starting to perk up a bit, right? People are getting excited about it after, for the longest time. Here, let me actually, this is not the best chart. Let's take a look at OMG, USDT. This is a better chart. Starting to perk up a bit, right? And is this thing going to do something spectacular here? Here's the thing. I don't like these coins. Now, this may be some news driving this thing possible now. If you want to judge this thing from a technical point of view, yes, you have a little mini higher low right here at 247 basically, and it took out this little minor resistance at 279. And it's going for this next resistance right here at 3 and at 335. Those are good signs structurally. So if you're interested in something like this, keep something in mind. These are not good swing trade instruments, okay? This is more like an investment type of instrument, and they are highly speculative, which means, you know, any news could come out like you saw with XRP, and this thing could work its way to zero. So you have to be prepared for something like that, for one, which means you don't throw a lot of money into it. For two, if you're going to invest in something like this, right now you can measure your risk, if you want to use technical structure, from that basically at $2 level. If OMG closes below $2, it's probably going to go lower. That's what it's telling you. But right now, this is a bullish sign, so maybe it will start working its way up from here. Okay, it's starting to take out these resistance levels, which is a good sign. I mean, that's a sign of capital flowing back in. But I am not a fan of these, like I said, because they don't trade on their own usually. So that's OMG. I mean, technically, it's definitely improving. So you throw $100 in something like this, and you hope for the best, basically. If it goes to zero, all right, you don't care, right? And if it runs to like $10 or something like that, you have a home run on your hands, and you take the money. Again, something like this, investing a lot of money into these things is like playing the lottery. One may work, but you're gonna have to take you're gonna have a lot of losing trades before you get that one. And it's very hard on the psychology, right? So anyway, so that's OMG. I mean, I like it. So ADA, we had a lot of questions about ADA. Let's take a look. Cardano, because it's been, you know, working its way higher. This is not a good chart. Let me see. Where is the Binance chart? Let me see here. Binance. Okay. So here's the Binance chart. As Ramana mentioned earlier, we talked about the breakout over here, right? I guess it was around there. And Ramana took it, and it worked out well into that 23-cent area. So the question about ADA is, you know, where do you buy it now? Where are the inflection points? So the first thing you want to do on this situation is check your support levels. So this is support level right there, right? That's an old resistance right here. It's an old resistance, which will now act as a new support. On top of that, you have a consolidation in here, okay? Which means it's very likely to act as a support if there's any pullback there. With today's candle, I mean, you can't really make any judgments on today's candle. And obviously, it's reacting to Bitcoin. Looks very similar. This wide range doji. I wouldn't touch this thing at these prices. So you want to see this thing pull back to somewhere inside of this consolidation range. That range is between, let's see, what's the low here? Basically 13.5 cents. And the high of the range is around 17.5 cents. So if price can pull back to inside the range and give you a long signal of some kind, whether it's a bullish candle, pin bar, something, then at least that's a much better place in terms of reward risk. Now, it sounds like Ramana took a swing trade to me, which, like I said, these are very tough to swing trade. But if you're looking for a high probability opportunity, that is what one will look like in something like this. Now, can I be wrong? And can this thing just continue higher from here in a irrational way? Sure, that can happen. But the risk is just too high. You know, that's what you need to keep in mind. So if you want to still be involved, like Andrew mentions a lot, you could take your small bite, but that's not a swing trade. That's an investment. You take a small bite, you hope for the best. If it pulls back dramatically, you buy more. If it doesn't pull back, you still have some, but you're not going to make a lot of money. If you're looking for, like I said, if you're looking for those big money moves, those home run type of trades in these, you're looking in the wrong market. Okay, there's so many better opportunities in the stock market. Even with options, there are much better opportunities, much easier ways to make money than on these. So anyway, but those are the levels I'd look for. If it goes vertical from here, you know, you got to be very careful chasing that. But I would rather wait. The high probability is in this range that I just described. Okay, so that's ADA. Now ZIL USDT. Let's see what that is. Oh, nice move. Zilika. Man, they got a coin for everything here. So first thing I want to see are levels, right? So this is one of those. See, when you see moves like that, you think others are going to do this too. A lot of times, you know, it has this one move, and that's it, and it never has the move again, right? So everyone piled into it for whatever reason. A lot of froth, a lot of speculation, and the smart money gets out, and now you're stuck with it, right? So, but it's a nice move, and maybe this broader trend will continue, right? Because obviously the structure is strong. And it made highs with Bitcoin. Okay, that's all acceptable. I accept those things. Now, as far as where to buy something like this right now, let's see. This thing is at 68 or 6, I should say around a little over, almost 7 cents, right? 0.0687. In a situation like this is a little too early to buy, although this could be a higher low developing. I'd rather see a structure, because the thing is, you don't have any major supports nearby. That's the problem with this. So if I really want to, force it and say, okay, where is there any kind of support? Well, you have this old resistance right here at this 5.5 cent area. So that might be a reasonable place to look for a high probability reversal, right, in that area, if it can't reverse here. Again, in these situations, I wouldn't swing trade these. If you get in, if you happen to pile in, you got in at a good price and it makes one of these great moves, you take your money and you wait for lower prices again, and you can average into it little at a time. Again, for something like this, your target investment, I mean, obviously it's going to be a function of your entire investment capital, right? So let's say you have $10,000 to invest just in general. You're not going to want to put all $10,000 into something like this, but maybe you want to allocate $500 to something like this. Okay, fine. But you don't have to buy it all at one price. So you could buy $50 at a time. That gives you 10 trades. All right, as this thing pulls back more and more and more before you have your $500 investment allocation completed. So that's one thing you could do. That's what I would do with something like this. You want to buy $50 worth here because it's a pullback. Okay, fine. Pulls back more, you buy another $50. Pulls back more, you buy another $50. Pops up a bit, you buy another $50. You can even, like I said, you could time that at the 1st and the 15th of every month. It doesn't have to be in a reactive way, like, oh, I feel like buying some right now. You could say, okay, today's the 1st of the month. I'm going to buy my $50 worth. I don't care what the price is. Right? That's really the way to play these. And then when you get a vertical move like this, right, that's the other thing that I didn't get to really cover much in my webinar. When you get the vertical move and you've averaged in for a low price, you partial out of the vertical move. You don't keep buying more. You use that as an opportunity to lock in your profits. Just like you averaged in, you average out. Okay? So that's your question. All right, I hope I answered that. Man, I talk too much. Okay, let me see what else we have here. So Romana, right, ADA, so I covered that. Okay. So yeah, I don't see the other setup. I explained that one, and I covered the support and resistance levels. Okay. Sean, okay, I answered that question. DJ, okay, AG. So let's talk about AG. AG is a silver mining stock, First Majestic Silver. And obviously, where gold goes, silver is going to be right behind it, right? Hold on a second. So as you know, silver is going to be right behind it. So just like the altcoins to Bitcoin, just like the S&P to many stocks, silver does not trade on its own usually. So I'm not a big fan of silver. Now, AG, a silver stock, obviously if gold and silver have a good day, this thing's going to go. You're at a resistance level right now. You also have this little gap situation that developed right today, right? That's like a little exhaustion gap right there. So this is not a good place to buy AG, even as an investment. I mean, you can probably get better prices, but if you must buy as an investment, you can take your small bite. Otherwise, if you're more interested in short-term levels and more attractive levels, where the higher probability, right, your first support is around about the $12 level. Okay. So, can this thing pull back to $12? Absolutely. I've watched this stock. You can see this thing, the March low was at $4, right? And then by August it was at $14? So in that 6-month period, the thing rallied $10 over 6 months. That's a slow mover. Now, again, more recently, right, December 1st, you could have bought some around that $10 area, and now it's at 14. So it took a month to move $4. Okay, not bad. But my point is, you could probably get better prices. This thing may break out, though. With gold going higher, this thing may break out. So another question you want to ask yourself is, if you want to be part of the gold breakout, you can buy this and hope it just continues. But if gold, for whatever reason, pulls back or whatever, then you're looking at that $12 level. That's your first support. So that should give you a sense of reward risk. Because again, this thing's a slower mover. How much higher is this thing going to go? after that breakout. Man, maybe it can run to like 15 or 16 or something like that. And that's, gold is probably going to have to reach 2,000 in order to see something like that, or maybe even more. So just keep that in mind. A lot of the move is been, a lot of the move is factored in. So when I see something like this, I prefer to wait for pullbacks. Anyway, that's AG. Let me see here. So this one is and now it's trying to print the kind of bearish pin bar. Right. So when gold is bullish, how do we trade something like this? This will be like a Roku chart. Okay, so yeah. So basically, when gold is bullish, this thing's trying to break out. Really, there's two scenarios, right? It either breaks out as gold continues, this thing breaks out, that's a high risk type of trade because it can always fail, right? Or you can wait for the pullback at some point and play it that way. I just think that there are better setups out there and better opportunities in other stocks. I'd rather buy something that's near a support that has potential. There's so much better probability near a support. Now, keep in mind, the general stock market may be entering into a weak phase, at least for a week or two, maybe. So, I don't think that's going to put a lot of pressure on these stocks because they're following gold. But again, just focus on levels, like I always talk about, especially with short-term trades, right? When we talk about our rules that we follow, it's always trend and then levels first. So if the trend is bullish, obviously, the trend is not bearish in this thing. So then the first thing I want to see are levels. Are we at an attractive level or not? This is not an attractive level. All right, it's just not. It's a resistance. So right. So DJ, if you're referring to he mentioned an unofficial trade of AG. Like I said, he likes these breakouts, and sometimes they work really well. It's just not my style. Okay, I prefer to buy strong stocks at supports. All right, BAT. So HS wants to see BAT. This is basic attention token. And so again, not one of my favorite because like Bitcoin has made all these amazing highs. Ethereum has made amazing highs. Litecoin has made amazing highs. And this garbage utility token can't even break out of its, can't even break out of this. That's not a good sign. That's relative weakness, lack of performance. It means no money is flowing into this right now. If anything, this thing should have broken out. If anything, this thing should be pushing this resistance here, right? So this is not good if you're in it, and this is not good really if you're looking to get into it because these things don't trade on their own. What happens if Bitcoin has a real pullback, right? Bitcoin hasn't even, that 7,000 point move that we saw earlier today, that wasn't a real pullback because it has not followed through. What if Bitcoin pulls back to 20K? Okay, what if it does that? Where's this thing going to go? Theoretically, this thing should break its support. So relative weakness, I don't like it. Now, doesn't mean that some news won't come out and out of nowhere this thing goes berserk. Right, that's a news play, and it's like playing the lottery. So chart-wise, I think this chart won't help us unless maybe you're an insider and maybe you have like an in with the CEO or something of the Brave browser, and they can tell you what's going on it's in their pipeline that no one else knows. Then you'll have an advantage. Okay, otherwise, this chart is not very good. Okay, it's like playing the lottery. Like I said, these are like penny stocks. So all right, so now DJ talking about the UVXY. Oh, I bought the WPM option. I put an order after a webinar. Oh, cool. All right, so Rockstar. Hey, Rockstars, welcome. BNGO. Let's take a look. Wow, that's a nice chart. Okay, so this thing went from 50 cents to $7, and this thing's up $4 today, up 132%. Okay, so this is a great example of a lottery ticket. Look at all this time. For the longest time, this thing was around 50 cents. Okay, for the longest time. Obviously, it's a penny stock or whatever. It was less than $1, and this is news driven. So this is the herd mentality. Day traders pile into this thing, right? Everyone piles into this thing. Reactive Robinhood traders pile into this thing, and they all think that they know what they're doing because they made some money in it, right? Okay, great if you're a gambler. Not good if you're looking to make consistent money. there's something that I mentioned in my TradingView article, which always holds true, and that is the market can be very misleading and reward you for ineffective behavior. And people with the human bias of overestimation bias, people will think, oh, I know what I'm doing. Yeah, it was easy. I know how to pick good stocks. Yeah, it was definitely because of my choice that I made this money. Meanwhile, the market will give you a random reward, just like a casino will give you a random reward when you play the slot machine. And you think, oh, that slot machine was hot. I'm going to come back and I'm going to play it again because I make money with that slot machine. Okay, it was random, but it feeds on your hope, right? It's all emotional. Casinos know this, and the market indirectly does the same thing. So this is one of those situations. I bring that up because this is the herd mentality, and it's usually a result of the herd mentality. I wouldn't touch the stock. Good to know that it's going like this, but here's the thing. It can turn at any moment, just like we saw with Bitcoin. At any moment, everyone's piling in, and then tomorrow the thing is back at $4. We saw this so many stocks, so even altcoins like OMG did something like this back in August. It went to $10. Next day it was back at $5. So leave it alone. Now, if you want to gamble and you want to buy 100 shares, see if it runs another $1 or $2, okay. But keep in mind, the chances of this thing continuing at this rate are very small. The higher it goes, the less of a chance it's going to continue higher. This is the herd mentality. More and more people will pile in, and keep in mind, all these people that pile in, especially at these prices right now, are going to add enormously to the selling pressure when that pressure comes. And a chart will not help you. There's no way to know what levels that it will turn at. I mean, a chart is pretty much useless in this situation, okay? So you have to understand the herd mentality, and usually, unless you're in from 50 cents, there's nothing to do here. If you're in from 50 cents or a lower price, then the thing to do here is let it run until you get a sell signal. Whether that's a pin bar, whether it gives back a good portion, or you just trail your stop. You just try to let this thing run as far as it can before it turns, if you're in it. All right? So that's what I say about that. Thank you for bringing that one up, because that one was not on my radar, rock stars. Okay, so BAT, I covered BAT. All right. Mark, while you are here, cover AG. Got it. Okay. Ramana, can you also tell me what the resistance levels are for Cardano, for ADA? Sure. So let's go back to ADA real quick. Right now, the resistance levels. It's a good question. Let me see. Let me go to a USDT. Let's go to Binance. Why doesn't this thing just give me the Binance chart right from the start? I don't know why. All right, resistance levels. So let's look back and see if we have historical resistance. So there is some historical resistance. Historical resistance is basically resistance that we could see on a chart. It could come in the form of an old support or a previous resistance, right? Compared to proportional support and resistance, which is something we measure and we project. So you have some levels right there. And let's see. So you're looking at, you blew through the first one with that 18-cent area. And your second one, look at that, went right to it, right? That 23.5, whatever that is, 0.23.5. So after that, if it can clear that, your next one looks to be up in this area somewhere. What is that? 36 cents? Around there. This is your next historical resistance, way up here. Now, does that mean it's going to go straight there? Probably not. I mean, it'll probably get stuck at the whole number, the 30-cent area. Whole numbers tend to be support or resistance levels. There's no guarantee, but there's a tendency. So those are levels I'd look at. 30 cents, and then that the mid to high 30-cent area, like 35 cents, up to 38 cents, that area right there. Those are your resistance levels on Cardano. All right, so I hope that answers your question. Let's see here. DJ, QS and Solo. Sure. So let's take a look at QS. QuantumScape. Is that the correct symbol there, DJ? Okay, look at that. So, Rockstar, if you want to get an idea of what Bingo or BNGO is likely to do, here you go. That's usually what you're looking at next. Okay, it may not be tomorrow, but that's what you're looking at next. Look at this thing. Wow. So this thing went from $10 to $130, and now it's at $50, right? All those people that bought this thing because someone told them to buy it, or they going on instinct, like my friend's friend, this is what they go off and get caught in. But because the market will reward you randomly, you don't see this coming, right? It randomly occurs, and then you blame the market, and then it was the market sucks. The market makers. Whatever. It's not your fault that you got caught in this. It's the market's fault. The market maker or this broker sucks or whatever. Right? There's some excuse. You cannot take responsibility. So that's what you're looking at for BNGO. By the way, this stock here, good level, great level, DJ. Look at this level, but I wouldn't touch it. Right? Look at this gap. There's nothing but bearish momentum here. No reason to buy into this thing. Wait for stability. When you see something like this, excellent. You want to see something that gets hated. You want to see something that pulls back to supports, but you can't step in front of it. You have to wait. That's where rules. You have to have some sort of rules, especially for short term. Long term, again, if you believe in the company and you want to invest and blah, 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 you take your small bites, right? And if you were taking your small bites on these highs, when it does this to you, now you're not getting shaken out like everyone else that piled into it too heavy. And now, gets ugly like that. That happens more often than you think. Okay, Solo. Thank you for bringing that one up, DJ. Solo. So this is one of those electric vehicle stocks, and nice consolidation. Look at that. This is stability. This is what you want to see your stock do after a dramatic run. Here is the dramatic run. It gives it back. Everyone forgets about it. Okay, this is when you want to become interested. Right in that area, right? The consolidation, beautiful. Got a double bottom over here. So we have a defined support at $6, and it's tested that area again. And today, it's giving this pin bar type pattern. But even though that's a bearish pattern, it's occurring out of support. So we can't view that as a bearish pattern. All right, it would be unwise to do that. So what we have to do is we have to look at the support. People will look at the pattern, it's bearish, and you're shorting right into a support, right? Or you're getting out right into a support. Why would you do that? Hasn't even broken the support yet. So I'd be looking for longs on this one for sure. Your risk can easily be defined, all right? So the low here is 602. So you can set your stop at like 5.5. That's plenty of room on this thing. And, so you're risking, right now it's at 650, whatever. So you're risking about $1 to try to make $4 or $5. Reward risk makes a lot of sense. That is how you put a good trade together. Even as an investment, you can take, if you had like $1,000 to invest, you can take a more sizable investment here. $100 or $200 worth. If it pulls back, you buy a little bit more. This thing has plenty of potential. Plus, it's an electric vehicle stock. Many of these things they run with the rest of the sector. So. Even though they are highly speculative, I think they're better than altcoins. So anyway, okay, thank you for bringing that one up. I like it. I definitely like that as long. That may even be a candidate for the next trade of the week, possibly. All right, so let me see what else we have here. So SL1, Sean, silver. That's the silver futures. So Sean, you look at the silver futures. Let's take a look at SL1, right? Silver futures. This thing is it's a very sporadic chart. Let me see if I can get a better chart on that. SL, that's the continue. Why is this something so sporadic? Let's see, SL1, this should be the continuation. All right, well, I'll have to work with the sporadic chart. Thing is, look, it's going to follow gold, right? Is this thing right? This can't be right. The silver's not at 62 cents. What am I looking at here? Let me see, silver, let me see, so I'll take a look at the trading view version of US dollars per ounce. Okay, there we go. That's the realistic price of silver right there. So the futures will reflect this. The chart, even though the prices may be slightly different, the charts should be the same, the patterns on the charts. Just like gold, right? Silver, when gold was at 1764, silver put in a pin bar. Okay, good. You're seeing them move together. Today, gold is pushing, whatever, 19, whatever, 40, and silver's trying to break out of this little resistance here. Okay, cool. But this is not a place to be buying silver, right? You want to buy it at a low when it's being hated, not when it's being loved. This is a place to be, if anything, if you have a silver position, never hurts to take a little off the table, right? But there's no reason to sell right now. Besides the fact that you're trying to break out, there's no reason to sell. So I would just hold and let this thing run further and see if it can test the 29.30 area as gold continues higher. Buying something like this, as a swing trade, it's tough. Let's talk about the risk, right? So if you buy the breakout at 27.40, so let's say you buy 27.50, you're going to have to put your stop around 26.25, something like that. That's a big loss on silver. That's a very wide stop on something like that. And it can easily go there because you're at the top of the range, right? So in hopes of making, a couple of dollars, not really worthwhile. I think as a swing trade, not really worthwhile. You're better off buying gold stocks. You're better off buying silver stocks. There's just so many other instruments to buy. So I'd leave silver itself. I'd leave it alone unless you're in it. Like I said, let it ride. Otherwise, wait for a pullback. The next support level on this thing is around there, right? The 25 area, which is, it may not test that, especially with gold going the way it's going, but that's where your probability is. And if it's not there, then just stay away from it, right? That's the best thing to do. Silver futures or the CFDs, they're not very good investment instruments. They don't pay dividends. In fact, they usually charge you a swap. It's like you have to pay the interest. So you're better off, like I said, with stocks. At least you could either collect a dividend or, the value of the stock usually does better. You can also buy smaller amounts, like one share at a time or whatever, and really control your risk very well. You can even, do stuff with options on that. Even when you want to sell a put, you could sell a put, and make money that way. So anyway, so thank you for bringing that one up. Let me see here. Bella, hey Bella. So QDEL, yes, I saw you had asked about it in the chat room. So thank you for bringing that question up. Let's take a look at QDEL. Now, first thing I want to see, so for example, if you come to a stock you're not familiar with, and the first thing you should be doing is asking trend. What can we say about the trend here? Well, we could say that overall it's bullish because we have a bullish structure from March, right, to August. That's a bullish structure, no question. Since August, it's been range bound, okay, with a range high of, about 300 and a range low of about 150, okay? Now, since that time, okay, this thing's been fooling around sort of in the lower part of the range, okay? So you're in something that's generally strong and something that's near the lower part of the range. That's an attractive place for longs, right? That's what that basically aligns with. And let's look at the current price action. You have a little higher low developing right here, which is good. Today's candle took out yesterday's high in a nice strong close. All right. And so this is basically like a double bottom. It's similar to a double bottom. What's the risk is the next question that we should ask if we were to buy something like this. Well, you have to look at the low. What's yesterday's low? Friday's low, 179.62. And this thing is at 190. So you're looking at least 10 points of risk. Obviously, this thing is a wild mover, right? Is that right? Let me just double check that. So the low there is 179, and today we're at 190. Yeah, you're looking at at least 10 points of risk to try to make at least 10 to 20 points. That's within reason on this thing. Okay, so you could do 1.5 to 1, possibly even 2 to 1, especially if it tries to close that gap. So technically, not a bad location for longs. I tend to stay away from these more expensive stocks, but hey, that's your preference. That's cool. Plus, I saw you're familiar with the company and you liked the fundamentals, so that's all good as well. Now, I'm looking at this from a swing trade perspective. As far as investment goes, yeah, this is not a bad area, right? You're definitely not buying the highs. You see the difference between buying something like Bitcoin at the high or buying some of these other ridiculous stocks like BNGO at the high. Here, you have stability, you have an established support, you have an established trend, you have so many factors that you can say, okay, I see that, and you can define your risk very clearly. Whether, even for an investment, you want to start taking a smaller, maybe a less smaller bite or a slightly larger bite here, that at least can be justified. If it breaks the support and starts going lower, you have other supports to look at here, like the 145 level, which would justify another bite, especially if you like the fundamentals in the company. You control your risk with size on when you're averaging into something. Now, keep in mind, averaging into a garbage stock or a garbage coin can be very, very painful if you put too much money on the line, because you're in something that can be going to zero, right? A stock like this, most likely, if you like the fundamentals, and they have fundamentals, then it's probably not going to go to zero, right? So it justifies using that technique. All right, so I hope that answers your question there. Thank you for bringing that one up. Let me see what else I got. I'm still going through the chat here. I know I'm a little slow on the chat, so sorry about that. So QDEL, okay. Let's see, DJ. All right, so I'm just reading the chat here. I said he put on 8 unofficial trades. Oh, he put on 8 unofficial trades like Guild, Neo, and Eno. Oh, okay. Right, so, well, that goes to show, yeah, there's a lot of action that goes on in the chat room. Sometimes I can't even follow it all because, I'm trying to get my work done. And, yeah, Andrew will put out a lot of those unofficial trades. That's where there's a lot of value in the chat room, because sometimes, we don't even have the time to send stuff out, but you can get a high quality trade or a good trade or just a trade idea. It's a great point of reference, especially he shares the chart and that whole thing. So that's cool. HS, ETC, USDT. All right, so Ethereum Classic, that thing still exists. ETC, USDT. So look, these I got tired of these a long time ago, right? These old forks of the whatever, and these are like, I don't know why they still exist. They don't really provide any value. What do they even do? Why does anyone even bother with these? So this thing's range bound, okay? If we want to look at this from a technical perspective, it's range bound. And you are not at the bottom of the range. You're fooling around near the $7 area or $7.50 area, near the top of the range. Maybe it'll break out of the range, but Ethereum went to almost 1,000, okay? And this thing is still messing with $7? Come on. Look, $12. This thing was at back in March or February, a year ago. This thing was higher. And this thing is still just messing around with the high of the range. I would not bother with this coin. Okay? Why is Ethereum Classic going to outperform anything when you have Ethereum? So, yeah, if you're in it, like, all you can do here is hope that it breaks out. If you're not in it, I wouldn't do anything with this. This is not a, this is, there are much better opportunities out there than something like this. So often when I see ranges, if it's a stock, for example, or something that trades on its own, like a stock index, perhaps like the NASDAQ or something, and I see a range, then I try to short the top of the range, I try to buy the bottom of the range. But this is like an altcoin and blah, blah, blah. I wouldn't short these. Yeah, if anything, if you want to buy it, wait to the bottom of the range at least, if anything. If anything. Try to line things up in your favor, okay? So, now hold on, pin bar on the 4-hour time frame. All right, so yeah, again, so we could see that this is not even the 4-hour, this is the daily time frame. We could see this bearish pin bar developing here. I wouldn't short this, like, you're just asking for a lot of trouble with these, but if you feel confident and you're willing to take the chance, okay. Just, you know what can go wrong, all right? As long as your risk is defined and you're prepared to get out if you're wrong. All right, but typically, if I saw this and this was not an altcoin, I would be open to shorting something like that. Okay, if this was a different market. Okay, DJ Bingo, I call it Bingo. BNGO is an internet stock. I don't want to say the name, as I don't want our traders to go to that website. It's all herd people. Oh, okay, yeah. That's the first time I saw it, but that's cool. So, definitely at least one for the radar, if anything, right? Anna, yes, good to put on the radar. Right, that's what's great about these streaming sessions. People bring up some great stocks that aren't on my radar, and you could pick up a lot of information. At least it's a good one to start following. That's where good trades begin. by following something for a little while, right? And then when the opportunity comes, you've been following it, you're prepared. Ramana, okay, cool. Okay. Kev, Eno looks just like Solo. So let's say Eno. Let's take a look. Eno. Oh yeah. So again, this is one of these pharma. These pharma stocks, one thing that's what's nice about these pharma stocks is they trade on their own. Okay, again, I was talking about the difference between things that trade on their own and things that don't, right? We saw like the EV stock Solo doing its own thing. We saw, you know, Tesla doing its own thing. Okay, cool. NEO doing its own thing. We like that. Eno is doing its own thing too, right? Pharma stocks tend to move more on news, and they're not highly correlated to the S&P. S&P gets hammered today. Eno is giving us a buy signal. Okay, cool. Now, so what do we like about this? Well, look at this. So you have the consolidation, right, low, double bottom or triple bottom situation. What is this low? $8.27. I like that price. So the risk can easily be defined here, right? Now, when you compare something like that to BNGO, which was vertical, right? Look back at Eno back in July, vertical. This is what BNGO looks right now. That's what it looks like right now. So you can't define risk from such a level, right? But people get caught up in that because they think it's going to go higher and higher and higher. This is what you want to see, the way this looks now. You can define risk. The low here is 886. So you figure 850, 8.25, maybe even $8, right? Current price is 973. So you're going to risk maybe $1.50 of risk. Okay, not that's acceptable. To make how much? Well, the high of this little mini range is $13. That's about what, $2.50 from here? So even if it goes there, which is very within reason, okay, forget about these higher levels. If it just makes it to there, you're doing better than what you risked, right? You're at over 1-to-1. So that makes sense. Eno is definitely a candidate. This may be trade of the week, you know. So either one of these, Solo, you know, Eno. I definitely like it. But that's what a quality opportunity looks like. Okay, so thank you for bringing that one up. Let me see what else we got here. DJ, right? So DJ is talking about a $10 call option for January 2022. 1 year out is $2.30. Not bad. Okay, you have an entire year. You're buying an entire year, 12 months of time value for $2.30 or $230. Not bad at all. That's cheap for that much time. Is Solo going to be below 10 for an entire year? Chances are Solo is going to pop, right? All you need is for a couple of weeks for it to do its thing, and you have an entire year to wait. And you're only risking, your max risk is $230 per contract. Makes sense. I like it. Kev, thanks for posting Eno in the chat room. Yeah, I like Eno. That's a very good candidate right there. Hey, pal, what do you think of CVS, he asks. Okay, CVS. Man, I'm talking too much here, but I have a bunch more questions. I'm going to answer them. Let me see how am I doing with time. 112. Okay. So CVS. This is now look at this. So it's got an interesting situation. It's trying to break out of the higher part of its range, right? This thing's been sort of range bound for a while. We look back to the previous November, right? The top of that range is, what is that price? Around 76.5. This area right here. And it looks like you have this little double bottom situation that's developed, you know, and today, you know, between Friday and today it's got this little move developing here, especially in the face of a negative NASDAQ and negative S&P. Okay, I like that. It's relatively strong, but, you know, if you buy this thing tomorrow, right, because the market's closed right now, you buy this thing at the break of that high. I mean, today the thing's up $1.67 today. I mean, you're kind of chasing it a bit here, right? So you have to consider what is the risk from this point relative to that double bottom area. So the low of that double bottom is 68.13. So you figure 68, around 68. This thing closed at basically $70. You're risking $2 if you buy it at the way it looks here. You're risking $2 to try to make at least $2 or $3. It's possible, but you know, I don't like when they start to go like that, and I'm not in it. You know, because I always believe that they can pull back. This could turn into like a head and shoulders. Call me pessimistic, but I mean, look, you do have the higher low. I would anticipate momentum should continue. I just like to buy things that have lower risk. Okay, that's just my style. One way to compensate for something like this is just buy less, smaller size. You normally buy 100, buy 50 shares. Pulls back a little, buy your other 50 shares. If it doesn't pull back, you're still in it. All right, even as a swing trade, you could do stuff like that. But the overall structure, bullish, not bearish, bullish, and you're coming off of a support at least, and you got potential. So you do have some factors that are favorable there. Okay, Beyond Meat, BY, how's that thing been doing? Let's see. Okay, so now here's a situation where we know this thing's a mover when it moves. You have some support right here. It's at the support level, and you got a pin bar today. Okay, after pulling back and giving us some sort of structure, we can define our risk. We're at a support level. So the question is, can this thing do its part and start to work its way higher over the next week or two? I like the pin bar. Definitely the break of that pin bar high, 126.03. So you figure 126.25 would be your entry. Your stop on something like this, 121. So you're risking about 5 points. Now, can you make 5 points in something like this? Yeah, that's within reason. I mean, if this thing runs back to its next minor resistance, which is right here, you're looking at 120, what is that? 134. So you have about that's $10 potential, and that's not even a real move. That's just testing its resistance there, old support. So risking $5 to try to make 10, that's very reasonable. So I like that. Keep in mind, just because we have these nice setups doesn't mean they're going to follow through. Just remember, they look good until they don't work, right? So just something to keep in mind. That's why I'm defining the risk first. And then we look at it and ask the question, does it make sense in terms of potential based on the structure that the market is presenting? Can Beyond Meat break beyond that and go back to 150? It can do it, but I want to be realistic. And I want to know the minimum levels or the minimum reward or potential that I can measure. If that reward is acceptable, then at least the trade has some merit to it. The swing trade has some merit. Remember, it's a swing trade. Okay, thank you for bringing that up. Okay, DJ, okay, cool. Hey, oh, no problem, pal. Happy New Year to you too. Natural Law, welcome. ETH, all right, let's take a look. So Ethereum, this thing went vertical, right? How high did this thing go? 1169. That's nuts, considering how bad this thing was acting not too long ago. Now, in these situations, all we can do in these situations, right, is look at the supports, look at the old supports, look at the resistances, and compare to where we are now. Now, we can go back, way back, because Ethereum was at these levels way back when. And what was going on way back when? What kind of levels in February of 2018? Look at these levels that I'm finding here. Okay, from January of 2018, this thing was up at these levels. These are very significant resistance levels that they have a lot of history here, right? So, as you know, in Ethereum, these are the levels you face. And as you can look at the reaction, right? Look at the reaction off of this 1150 level. So at this point, if you're in Ethereum, hopefully you've locked in some profit. I know Andrew sent out a trade earlier, I think it was earlier today, to trim off like 25% of our Ethereum position, from our inventory, which is not a swing trade. So as far as that goes, yeah, that makes sense. You want to be trimming, take something off the table, especially in the face of such a bearish pin bar. As far as buying more, I would wait for supports. I mean, when it goes up too far, too fast like this, if there's more of a significant pullback over the next couple of weeks, which is very possible, you may see those 700s again, right? So wait for better prices. Just be patient, and you may get them. So that's really your two options. If you're in it, you should lock some profit in, and otherwise, if you're not in it, this is not a place to be buying, okay? Not for swing trades. Again, investments, you want to take tiny bites. Remember, you're buying highs. We just looked at a bunch of stocks that had I just described attractive situations to be buying. This does not look like that, does it? This doesn't look like Eno. This doesn't look like Solo. This doesn't look like CVS, right? This is not what a buying opportunity looks like. And that's why even when I invest in stuff, I don't buy stuff that looks like this, because I know that there are better opportunities out there. But I'm pessimistic. Anyway, So, all right, let's see what else we got. Man, so I hope that answers your question, natural law. I'll talk for a little bit more, and then let's see, natural law. And what's the possibility of upside? All right, so now it's hard to say. Look, the trend is definitely bullish, which means, and just because I may be realistic and I may be hesitant at such levels, doesn't mean I'm bearish on these things. I just want to see prices that I could measure risk from, and I can't measure risk from here. So as far as potential goes, 1366 or that 13.5 area, that's a level. That's an inflection point, or that's a historical level dating back to, 2018, right? You could see that on the chart there. So that's a potential level that it can run to. I don't expect it to go there in a straight line, although anything is possible. So that's some potential to look forward to. If you're interested from an investment point of view, this thing is bullish, right? There's no question that these things are bullish and money's flowing into them. So that's good. We don't have to worry about bearish stuff until supports getting taken out, like major supports. And we don't have that situation right now. So what you want to see, as a swing trader, you want to find attractive levels. And you can measure your risk from there, take a trade, right? As an investor, you want to see pullbacks, or at least look at pullbacks as an opportunity to invest a little bit more than you would. And at highs, if you're going to continue to invest, or you want to, you're not in and you want to invest, you invest less. So like I said, you have your target amount, you want to invest $1,000. At such levels, you don't invest $1,000. You invest 50 bucks, okay, which is a tiny fraction of your $1,000. So if this thing pulls back to 700, your $50 turns into $30 or whatever, $40, and you don't care because it doesn't cost any. It's not going to be very painful for you. You're not going to get shaken out, right? And then you could buy more because you still have $950 to invest. So maybe you buy $100 at that situation, okay? So again, that's one thing you could do with like Ethereum, or you could space it out on a date basis, right? So first of the month, you buy $50, 15th of the month, you buy $50, no matter where the price is, because you believe in Ethereum, you believe in what they do, and you believe in the future that it's going to be higher. I mean, obviously, Bitcoin is in such a position, and it makes sense to at least use that method, averaging into assets that have that type of future. If something changes along the way, you don't keep putting more in. So if you have $1,000 to invest and you've invested 500 of it over like a 3-month period, and then these things start breaking major supports, you don't invest the other 500 in it. You hold off until stability returns, right? And that protects your money. So I hope that answered that question there. Man, I'm on a roll here, DJ. I know, 2 hours. No, I'm not doing 2 hours. So let me see where I am here in the chat. So Michael has a question. Wait, hold on. Wait, hold on. DJ got into Guild Eno today. Oh, nice. I really like that Eno. Michael, how do you feel about PACB? I know it's a shallow pullback, but this small consolidation and the relative strength makes consider buying the breakout with the stop loss. Okay, Michael, good question. See, a lot of these people here are members of our chat room. So even though I'm talking too long here, I want to make sure I answer everyone's questions, especially like Michael's and DJ's and people like Alice and, Anna. They've been with us for a long time, so I don't mind, putting the extra time. So, Michael, nice higher lows, nice higher highs, right? No question, bullish. Now, so Michael's saying the pullback is kind of shallow. All right, so the question then you have to ask, Michael, as a swing trade, you got the pin bar, all right? You got that. The thing is, it's not at the best level, right? So the question you have to ask is, what kind of risk are you facing? So the close of today is 26.38. If it takes out that high tomorrow, basically 26.53 is the high, today's high. So if it pushes that tomorrow, that would be your entry, right? Your stop would be around that 24.86. So you figure 24.50. So you're risking $2, okay? You're risking $2 in hopes that it breaks out and you make at least $2, right? 1 to 1. It can do it. So it's not a horrible idea, right? Because you can still you could manage your risk. You know what you're risking, $2, right? If this thing doesn't work out, you're losing $2 or less if you can manage that. Your support here is this 23.5 area, 23.25 area. That's an old resistance, right? And it's acting as a support. So as long as it stays above that, that's a higher low. And in theory, it should make the higher high. So, I mean, it does make sense, Michael. It's not my favorite type of trade, but it does make sense. I mean, it may pull back and stabilize around that 23.25 area, but it is more of an aggressive swing trade. I would classify it as more of an aggressive swing trade. So perhaps to compensate for that, perhaps you take a smaller than usual position, a slightly smaller, to compensate for that. Okay, cool. So I hope that answers your question. And thank you for bringing that one up. I definitely like it. Okay, natural. What's okay? I answered that. Anna, still waiting to buy. Okay, yeah, Jumia. I was looking at Jumia earlier. The thing is finally pulling back. It's about time because I want to buy Jumia also. There's no reason to buy it right now. That's an ugly candle, bearish momentum. Too early. You know, whether it's a swing trade or a position trade, I just think it's too early. So first support on Jumia. You can see our old trade here. We got out of this thing at 13.5. Wow, this thing went to 48. The hell were we thinking? So 24 area is your first, that's your first structural support area or historical support. You may find, well, you may find another one here around this 30, low 30s possibly, because there's some price action in here. You know, there's some price action right in there. So I would wait. There's just no reason to get into this just yet, but definitely on the radar, right? So watch for the low 30s and watch for the mid 20s on Jumia. I definitely will be watching that one. Also SPCE, that's an old favorite. Again, so nice pullback, right? Nice pullback, consolidating a bit, trying to develop a double bottom situation, and it's trying to do it at an old resistance, which should act as a new support. And it tried to act that way a few weeks earlier. Okay, fine. So attractive location, trend is bullish, okay? Broader trend since that November low, arguably bullish. So you're trying to buy into something that's near a support and something that's generally bullish. Okay, that all makes sense. As far as today's candle, that's bearish. Okay, the candle is bearish. So I would wait. If anything, you could use the high of the previous few days as a point of reference, 24.38. So 24.50 area, minor resistance. That would be a good place that, you know, you can use that to justify the trade. Your risk would be measured at 22.90 or basically 22.5. So you're looking at about $2 of risk if you take such a trade. And there's plenty of potential in this thing if that thing goes. Okay, I mean, your first level is going to be like in the 27s, maybe 28s. So you're risking $2 to try to make $3 to $4 on a pretty reasonable move. We're not even talking about testing the 35 high, and you're buying near the low. Okay, so there's a lot going for you on that. So I like it. It's just there's no signal yet, at least for a swing trade. There's no signal for something like that. Okay, but definitely on the radar. Watch for that resistance to be taken out. Okay, so I think I got all the questions. Let me see. Okay, Anna, I need to get back. Right, yeah. So these, what we just looked at here, like Neo, this one, you know, well, no, not Neo. I'm sorry, Eno. These are what buying opportunities look like. Okay, not BNGO. This is definitely not a buying opportunity. Definitely not. So you should learn from that and recognize, you know, the what a buying opportunity looks like, because that will protect you. Same with like something like CVS, right? Like, I mean, look, that's on its way, and you're better off trying to buy something like this than trying to buy something that's vertical, you know, like we saw with some of those ridiculous stocks. At least this is coming from a good place, and you can still measure your risk here, and it's got plenty of potential. Okay, so just some things to keep in mind. All right, so I'm not going to run for 2 hours here today, although DJ, I'm almost there. An hour and a half. But I figure it's a new year, you know, let me make sure I answer everyone's questions and start this thing off right. All right, so I'm going to wrap this up. If I didn't answer your question for whatever reason, if I missed it, please come to our free chat room over at greenbridgeinvesting.com. We'll be happy to answer it in there. Also, check out our 7-day free trial. We have a swing trade signal service by text, by email, portfolio management ideas by email. And like I said, we have a member chat room where most of the people in here are in the member chat room. And Andrew puts a lot of valuable information in there. Okay, like DJ mentioned earlier, we had a bunch of unofficial trades, which means it's up to your discretion and they don't go on our track record. So you have to manage that pretty much on your own. Stuff like that, okay? But we have a 7-day free trial. please check it out. Please come by and say hello. I hope you found my session here informative and helpful. If you have, please press the like button, and I would appreciate that. Otherwise, enjoy the rest of your day, everyone, and I hope you had a great holiday. And we'll be back at it tomorrow. Remember, tomorrow is Talking Markets with Mark and Andrew, the podcast. We stream it here on YouTube at 4 p.m. Eastern Time. So come back, check it out, ask us questions, and we just have some fun. Hopefully Henry will be back, so he won't be fixing his house. And he's got to get his priorities straight and show up to the show. And we'll cover a bunch of things with Bitcoin, altcoins, you know how it goes, stocks, a lot of stock stuff, and of course, trade of the week. All right, everyone. So enjoy the rest of your day. Thank you very much for all your great participation, and I'll see you in the chat room. Thank you.